And you're talking about going from this is quite an enormous rally from 191 or 193, I believe it was, up to 381. This is an amazing percentage gain. Now I'm going to back out a little and go to start this chart at 1928. So you can see that blow off top, if you look at the low in May of 29, that's what we're talking about. There was another big rally before that, and then a consolidation. But from late February of 28 to early September of 29, you're talking about a doubling. We went from 191 to 381. This is enormous. And the euphoria that they had back then was very similar to the euphoria of the stock markets today. Then, that's September 3rd is that chart. The next chart is the 18th of October. And you can see that there had been a pullback. This was not the crash yet. And it sort of developed a little head and shoulders pattern, which is interesting. And then over the next 9 calendar days, now these are calendar days, 9 calendar days could incorporate 2 weekends. So this is a maximum of 7 trading days, but possibly as little as 5 trading days. It crashed all the way from that 333 points down to 230. This was so blindingly fast. It's an enormous crash in a very, very short period of time. And then the day after that is when the author, that was on the 29th, this headline of "Brokers Believe the Bottom is Reached" is on October 30th, the next day. And so the crash had stopped, there was a bounce, and that headline was written on October 30th. The next chart here is November 13th, but October 31st, the very next day, was where the Dow peaked and then rolled over again. So that prediction, that headline, was true for 24 hours, and that was it. And then we had a 5-month rally after this temporary bottom of 198 was reached. So you've gone from 380 to 198, and then a rally up to 294. So
right, and Mike, just to chime in there, so that headline came out and said, "All right, folks, wow, we didn't see this correction coming, but the bottom's in." It bounced for a little bit, then dropped again, to a point where everybody said, "Okay, we were wrong the first time, but this is the bottom." Then they now have this pretty substantial rally, by the end of which people are feeling like, "All right, well, we're out of this thing, and we're recovering our losses, and looks like sailing is going to be good from here."
Right, but then anybody that did get in suffered some tremendous losses, and if your stocks pretty much averaged what the Dow Jones was, it took about 5 months to recover, and we did get back up in April of 1930 to a breath away from 300 here, 294. But then take a look at what happened over the next couple of years. So look at April of 1930, and you can see that peak of 294 in April of 1930. And the next portion of the crash that brought it all the way down to 41.22 points. And now I want to, in study